Hello everyone. I wanted to reach out to you guys and give you an update on how the current economic environment is affecting our business, the mobile home industry in general, and what type of opportunities that we're seeing and what type of challenges we're having. There's a lot of, I'm communicating with a lot of investors and a lot of the same questions are coming up. So I want to see if in this video I can answer a lot of your guys' questions and just try to share with you what we're seeing. Right now, the effects on our business. I think one of the main questions that people ask is how are collections. We've been really surprised. I would say that in April we were very nervous about collections, and that really led us to push very hard on communications with tenants, and actually our collections have been just fine across the board. We've had some random parks that were about our delinquencies were about 5% higher, and then some parks we actually were able to collect more than our average monthly delinquency. So that overall went really well. We were a little concerned this month, and we didn't have that same nervousness that the day one we need to collect. So we put together a program with the on-site managers to almost a little bonus program competition of who could get the most rents in before the 5th. And with a couple different levels of bonuses for them, and they were really kind of excited about that. So we don't expect any major collection issues in the next, due to this. What was interesting was we had a lot of late payers, and when we went back and looked at collections after the 20th of last month, we were able to collect a lot more. One of the things that we did was once we heard that people were getting stimulus checks, we actually went back and started knocking on doors and communicating again and with the residents just to make sure that we were kind of front and center once we knew people started receiving those stimulus checks. So one of the things to think about with our business is that we probably have about 25% of our properties are senior properties. So they have a reliable fixed income, and most all age parks are about 50% senior anyway. So we have probably 60% of our tenants across the board are going to be seniors. So they're going to have that fixed income. We have a lot of people that are on some sort of Social Security or disability, and then we also have a lot of essential workers that are in our parks also. So I think because of that, it hasn't hurt us as bad. And I think if you look at an apartment rent, if someone's paying $1,500 a month opposed to $500 a month, it's probably a lot easier for them to keep up. So we've sent a couple different letters out to all of our tenants communicating that if they're having a problem paying due to COVID-19, to come to us, let us know, and then we'll work with them through this hard time. So we're going to do everything we can to help them find help and see if there's ways that we can help them get back on track. On the average 100 space park, we've had 2 or 3 people come and say we can't pay due to COVID. So we're working with them, and hopefully in the next 45, 60 days we'll be able to get them back on track. Our business is such that if we're not able to help them get back on track and they lose their home and lose their space, then because of how the supply and demand works, we're going to have a lot of people looking to fill. If things are that bad that we're losing people at the mobile home parks, then for us, it's just going to be a little bit of a blip on our P&L. There'll be some legal fees, and then we'll end up finding someone else to replace them, to replace that income. Fortunately, the business we're in, everything kind of leads to this type of affordable housing. So if it gets worse, then it's only going to be a blip, maybe 2 months, maybe 6 months at most, and then there'll be kind of a line to take those spaces. So the RV parks are a little bit different animal. We have 3 properties up in Northern California where the sheriff has actually stopped us from doing the daily and weekly business. They're only allowing the long-term business, which all 3 of those properties have a good portion of income from long-term tenants. We have 6 RV properties that we're probably going to hit record numbers this year, and we the new websites, the new marketing, things were really tracking incredibly well. And because of COVID-19, the incomes have been slashed in half at some parks, and maybe 90% in others. So a couple different things. We were able to get the PPP money for those RV parks, so that'll really help. We haven't laid anybody off. We haven't reduced anyone's hours. In fact, we're really kind of using this opportunity to look at what projects that we can take care of. So we've got a park up in Trinidad that's in the 2019 fund. We've got another park in it's a Willits KOA, and these parks have never looked as good as they look now, because we're not so busy serving the customer, but what we're doing is we're fixing the ponds and restaining the cabins, and just making the parks look really look great. And we're excited because we think that people are going crazy inside the house right now, so they're going to we just think the RV business is going to just boom, just take off immediately, because we feel that they're going to be traveling out of the country less, traveling by plane less, and RV just seems like the way to go. So our RV parks, several of them are still making money, and just a couple of them are hit kind of hard. But the other, I want to talk about banking a little bit. We actually had, on 3 of our properties, we have the same lender. That lender offered to take originally 3 months of our loan and push that to the back of the loan. It's a 30-year loan due in 15 years, and they were actually went to the board, and because they have a lot of other hotel, motel type operations that were shut down by the same sheriff and these type of things, that they came back to me and said, look, we're going to take 6 months of your loan and push it to the back at year 15. So we went ahead with that program with 3 of our properties in Northern California. So that kind of puts us in really good shape to deal with the loss of revenue. So, which kind of brings me to having a relationship with your bank, and having your bank be a partner. A lot of the guys out there buying properties, they will never do a recourse loan, and they end up doing these conduit loans, and they because of that, they don't have really any relationship with their lender, and there's no flexibility with that. So on these recourse loans, I actually feel that there's less risk, because the banks are our partners. We have good relationships with the board members, with the underwriters, with the salespeople there. So because of that, they do these type of deals, which kind of solves the problem. It works for the bank. It doesn't really even affect their balance sheet, and gives us plenty of room to breathe. On those specific 3 properties, we actually had a good amount in reserves, and we had the portion of long-term income. So we didn't necessarily need that, but when you look at the return on that, it seemed like there was no reason not to take it. Every month I get a spreadsheet that, because we have 105 properties now in the 2019 fund. There's 36 properties. We just closed escrow on our last property about 10 days ago that I want to talk a little bit about. But so every month I get a spreadsheet from one of our team members on which parks are due for an annual rent increase. And when this started, most of the rent increase notices are 90-day notices, and we send those out with the rent bills at the end of the, at the 25th, 26th of the month. And so what we've been doing is just pushing those back a month at a time. So we have really 3 months of rent increases that'll get pushed probably where they won't go out till the end of this month, or they'll possibly go out in June. But we'll just kind of see how that goes. So one thing that will affect the pro forma on some of these properties is the rent increase being pushed back for these 3 months. It's not going to have any major effect, and maybe we can catch up. But I didn't think that it was right to be sending out rent increase notices when there are people that are their job, they were forced to basically stop working, and they don't have, and hopefully they have a job to go back to. So, but definitely not the right time to do rent increase notices right now. So we're pushing those back, and we'll have a lot of rent increase notices that'll go out in the next couple months here, hopefully once the lockdown opens up. Most of you that are invested in the 2019 fund know that we, how the fund structure works. We trued everyone's preferred up till the end of last year, paid that out the beginning of January, and then we did our first quarterly distributions at April 15th. I was very conservative on those distributions. I actually got a lot of calls from investors about how they kind of wanted me to be conservative more. I feel like I'm a conservative person anyway when it comes to that, but looking property by property, how much reserve should I have for each property? And on the RV parks, we're setting up to double our previous reserves, because you have more volatility in that in the RV side of the business opposed to the mobile home side of the business. With the mobile home parks, we're increasing our reserves across the board with those also. What we decided to do on distributions was we went ahead and any park that wasn't a project park that had plenty of cash flow, we went ahead and paid the five pref distribution out. If it had a lot more, if it had additional funds that I normally would have distributed, I decided not to. We can always catch up at the end of the year. We can always catch up, in Q3 and Q4. It didn't seem, it seemed like from investors that I spoke with, it would, and in our team, that it'd be better if we were a little more conservative on Q1 distributions, with not really knowing, how quickly people are going to get back to work and how rent collections were going to go. So, hopefully we'll get to the right reserves as quickly as possible, and then distributions will continue to go out. So there were a few parks that we didn't do distributions. If the distribution would have been below a 5, then I didn't bother sending out a distribution, and we'll just catch up at the end of the year. And then there's some parks that are, big project parks that weren't scheduled to have a distribution in the first couple years. So those parks, are ones where we're cleaning house and bringing in a bunch of homes and filling up spaces and rebuilding infrastructure and things like that, where they're spending money, which is kind of another thing that I wanted to kind of share with you guys, is that how we operate here. I talked to you about how we haven't laid anyone off. We're still expanding, we're still buying, but we've been interviewing a lot of new regional managers, and we've been searching for regional managers from the pool of apartment complexes. And we had some great interviews last week. It was really, really interesting. Met some terrific people, and we're actually going to do some offer letters this week. But what was interesting was that they managed each person we talked to managed between 700 to 1,700 units, and they had their own team, and I like the way that they ran their teams, but they all kind of complained about their owners the same way. And it was that due to COVID-19, they were cutting back on the maintenance on the properties. They stopped, basically they laid off some of the maintenance people on the properties. They told the on-site managers that there was no more overtime. They even one of the regionals even was actually paid hourly, and then had a lot of overtime to kind of make up for her low pay, and then that was cut back. And then the spending was cut back, and the projects were cut back, and these type of things. And I think about that as that's not what we would do at BoaVida. So we feel that this is the time to make the property shine. So we want the properties to look their best. We're not going to be the company that's going to lay people off or reduce hours. We're going to again, we were able to get the PP really fast. We're probably one of the first companies to get it because of our banking relationships, which we really only needed for the RV parks. We basically have the opposite mentality of let's use this time to make sure that our properties look great and be in good shape, so that that there is going to be more demand for our product, whether it's mobile home or RV. And at the same time, we saw the negative effect of that mentality to kind of the team, where we've been working our communications with our regional managers and our on-site managers has been increased, and we've been encouraging them to communicate more with the tenants. That's really the key to find out if there's any problems, or there's any people that we can help make their payments. So I want to talk about, a lot of people ask the question of, will this create any opportunity, and then what type of challenges has it caused? So going into challenges, everything is more complicated now. I'm still going to the office. A lot of people are still going to the office, but there's a good portion that isn't going through the office. We're also in the process of building out our 7,000 square foot new office right next door, and we're really excited about that. Everyone's really, they want to get back in. They want to work with people. They're bored of working at home. They're going stir crazy. So we've been having tons of Zoom meetings for work, but also we've been doing Zoom meetings for fun too. We've had Thursday evening or Thursday late afternoon Zoom meetings to just kind of not talk about work with the team and just have fun and keep it kind of light. And so the communications has been is pretty much the thing that we've had to make sure that we increase the amount of communications to keep everyone together. So escrows are taking longer. Anything that you can think of, underwriting on deals, everything is more complicated. So the normal daily process of doing things just is a little more complicated. So The opportunity is interesting because at the beginning of the year, when people ask me, oh, well, how many deals are you going to do this year? How many, and how's the competition? The competition every year has just gotten tougher and tougher. And not that they're tough, but there's more competition and there's more money chasing deals, and they're not, they're doing deals that we wouldn't do. But even that type of stuff pushes the market up, and then it's just so important that we have the right relationships with all the brokers, and we see the deal first, but we also see the deal last. And what's interesting right now is because we have the best relationships with the brokers, is we see the deal last. So what's happening is the financing and liquidity is kind of dried up. So it's still there. A few weeks ago, the conduit stuff kind of completely dried up, and now it's coming back, but it's not great. To give you kind of an idea, we had a couple deals under contract. One that we just closed, it was the last deal of the 2019 fund. If you can get a Fannie Mae, if it's a Fannie Mae quality or Freddie Mac quality, then you can still get a pretty amazing loan. The spreads are higher now. So what's happening is on the last deal that we just closed with the 2019 fund was 168 Space Park in Rock Springs, Wyoming. It's very solid park, direct bill utilities, a great location right next to the Walmart. They can walk to Walmart right in town. So we were able to get a Fannie Mae loan on this property at 2.7%. So that's a 30-year loan due in 10 years and interest only for 5 years at 2.7%. So that's, once you factor in inflation, that's, practically free money. So when we underwrote the deal, we underwrote the loan much higher than that. And so when you have a good cap rate going into a deal, you have upside going into a deal and a few spaces to fill, and then on top of that, you end up getting a 2.7% interest rate. It really makes that cash flow nice. So, and then we've got a deal in Wichita that's a very large deal. That'll be the first one that closes in the 2020 fund, and we locked that rate at 2.75%. So, if we get a Fannie and Freddie loan today, the expectation should be about 3.25% to 3.5%. The spreads have increased. The lenders are protecting themselves a little more, but all the conduit stuff is becoming more difficult. The rates are going to be more like 4.5%, maybe as high as 5%. So most of my competition on the sizable deals, they won't sign personal guarantees. That means that if a park, it could be a beautiful park, but maybe it's got too many park-owned homes, or the homes have hitches on them, or there's street parking, and they don't qualify for Fannie, they don't qualify for Freddie. So now they got to go to and get a conduit loan. So these loans are really expensive. Legals, $50,000 minimum. And they're really kind of a pain in the butt to get. So they're complicated to get. They're more expensive. The interest rates are going to be higher, and everyone's going to be picky. So whether it's Fannie, Freddie, or the conduit, they're going to be picky on the borrower. They're going to be picky on the property. So and then the other thing that everyone's doing is they're baking in reserves. So depending on the leverage, if you're 65% leverage, it may only be 6 months reserves, which is, you have to underwrite that in the deal. And then, and if it's 70%, it might be a whole year of reserves. So your return's going to be affected by that. So because of that, we have deals. There was a deal today that came in where we offered $14 million, and they had it under contract for $14.5 million, and this was maybe I feel like it was 6 months ago that we looked at this deal, and it just fell apart. So now they come back to us, and okay, well, let me take another look. Do we want to buy? Do we want to make an offer at $3.5 million? I mean, $13.5 million. So we've been seeing a lot of that, where there's been several occasions in the last 2 weeks where the buyers are not getting the financing that they thought they were going to get, and because of that, they're dropping out of these deals. They can't make the deals work because for them they were too tight. A lot of those deals we had made offers on, and but our offer was so much lower. So now, it's kind of like they're all coming back to us. So it's interesting because we want to do more solid deals this year, less projects this year. But I think we're going to see a lot more opportunity than, at the beginning of the year I thought we were going to see. So, we're pretty excited about what could happen with the kind of lack of competition. So, some of the even my communications with Sun Communities, actually the biggest mobile home park real estate investment trust, they seem to be pulling back a little bit, focusing on their construction projects, possibly slowing down on acquisitions. Not that we were chasing the same deals at all, but there's a lot of people kind of slowing down because of this. So we just want to be really careful on the type of properties that we're looking at, and make sure that we're allocating the capital to the different places we want to do business, and kind of taking advantage of any opportunities that come up. Usually, mobile home park sellers don't have to do a fire sale and don't have to sell, So a lot of what's happening is they'll just stop and take their property off the market, and that's definitely making the brokers nervous. The brokers are going to want to bring everything to us because we've got such a good reputation of closing deals. So all that stuff is going to really help us. We also have great relationships with banks that are recourse banks that will finance stuff that isn't Fannie Mae or Freddie Mac quality, but are still really solid deals. And we just need to change, a few things, sell some park-owned homes, remove hitches, remove street parking, these type of things, and then we can refinance over with Fannie or Freddie. But which is there not a whole lot of buyers out there have the relationships with the recourse that can go do those type of sizable deals, and or are willing to sign the recourse. So that really gives us quite an advantage. A lot of people ask me what's the big risk out there, and I think about the stories that I've heard of real estate groups years ago, or in the when liquidity would dry up and loans would become due, or the values of the property would drop below certain thresholds, and banks would come trying to foreclosing on the property. So first of all, we don't have any loans that are due. We don't have any loans that are due anytime soon, especially in the 2019 fund. I do have some properties that we're refinancing this year that we're very excited about getting some fantastic rates on. The challenge with, so if you've been an investor with me for a while and you're in some of these deals that we're working on refinancing today, the PPP loans have just completely swamped the banks. So refinancing these loans is just taking a longer time. If we're refinancing with Fannie or Freddie, then even that process, because interest rates are so low, is a little bit slower. There's a lot of people looking to refinance. So the whole process of the properties we had planned on having refinanced in the next 30 days are probably going to take another 60 or 90 days to get done. So again, that's just the COVID-19 making everything a little more complicated, but we'll get the loans done. We'll get phenomenal interest rates, and then we'll get that money out to investors, and then we'll all, including myself, and then we'll be able to plug into more deals. But the concern of loans coming due or that type of thing, it's not. I don't see that as any sort of fear that we should have. The update on the 2020 fund is we currently have $85 million of purchases under contract. We have, I believe, about four or 5 weeks ago, we sent out the intro to the 2020 fund. We've got it opened up. We are currently raising money, and so far it's going really good. If you take the Wichita deal out of that, it's 20 million, so we've got 65 more in the pipeline. A lot of those escrows are getting pushed back just because of traveling and other things being more complicated. Some of those deals we won't end up doing. I was able to travel around, and hopefully we'll be able to put out a video of our due diligence process that we're working on, so you guys can kind of listen to me and some of our underwriters just going through the details and how to, why is this a good deal? Why will it work? Why won't it work? What do we like about it? And what don't we like about it? And just kind of see in how we discuss deals and decide if we're going to move forward with the deal. About 10 days ago, I took a trip, visited 3 different properties, and we're moving forward on 2 of them, and so we'll get you guys more information on that, and I think it'll be fun for you to kind of see us go through the underwriting and talk out the deals and be kind of part of that. So I think that addresses a lot of the questions and concerns that people have. I'm thinking about doing this maybe once a month to kind of keep investors updated. As we did last year, as we close deals, we'll still be sending the constant contact emails out to everyone so they know what acquisitions we're doing. The website, the BoaVida Group website, please go on there if you have any questions on the 2019 properties. We have the 2019 P&Ls uploaded. We're hoping in the next couple of weeks we'll have the Q1 P&Ls and balance sheets updated, and we've added some different information to each property, and we'll continue to do that as we grow. The Rock Springs deal was the last acquisition for now for the 2019 fund, and everything moving forward will be 2020. And we'll start a new investor portal for the 2020 fund as we start closing deals, and we'll start uploading all that to that site. So that'll be exciting, and we'll try to get shorter videos than this one out to you guys about kind of some of the acquisitions and any updates, and and hopefully this lockdown goes away and we can all get back to work. I know I've been and the whole team here has been it's created 3 times the work, so but we wanted to make sure that we pushed hard and still completed projects across the board, and the team's just been really done an amazing job with that. So let me know if there's anything. Shoot me an email, and if there's something you want me to address in a video like this, or need to hop on the phone and chat about some stuff, let me know. All right, God bless.